Good 18th of September, if we can believe this already, on a gorgeous early fall, partly to mostly sunny with high cumulus nimbus clouds rolling in out of the west, ahead of a slight cold front in the greater Roseville metropolitan area in the great state of Michigan. This is International Vincenzo's Gold Crypto Investing, where you bell notification, subscribe to the channel, comment down below, and like it to get that truth and integrity you've come to expect, just like the market pumping today. You've come to expect that from the #1 cryptocurrency and XRP insider here on social media and here exclusively on YouTube. As you know, we're in the midst of our 7 days a week International Vincenzo's Gold Crypto Investing on a 76-degree high temperature and 67-degree current temperature. We're in the greater communist country of Canada for 10 hours a day the next 50 days, right? But as we get on with that and we get into some of the XRP news in this brief update here, we'll see something that I wanted to talk about, which was right here, but it seems every time I don't understand this. There it is. Bam. So here's what we wanted to get into. Ripple partner registered 20x increase in on-demand liquidity usage in 2022. Tranglo, one of the largest partners of Ripple fintech Decorn in APAC, shares the statistic of its service in 21 to 23. All critical metrics are rocketing amid regulatory hostility and market performance uncertainty. Tranglo increased Ripple ODL usage by 1,700% in 2022. On-demand liquidity usage, the net ODL transaction volume increased $53 million to $970 million in 2022. This data was shared on the Tango published by Singapore financial media outlet The Edge. Since 2008, the company has enjoyed a 20% year-over-year increase in partnerships thanks to collaborations with Ripple and many other along the years were global, right? So that's very important. And all company processed over 3.3 billion in transactions. One of the critical things you need when looking at a blockchain and a partnership to move money in a digital age, in a digital world with a digital currency. In 2022, while the first 6 months of 2022, this sum exceeded $2 billion, right? 80% of the transactions were finalized in real time with zero latency, right? So real time, $2 billion done out of 3.3 billion. Very impressive. Servers demonstrated over 99.9% uptime, which allowed the server to accomplish previously unseen metrics related to consumer experience, right? So good consumer experience, on-demand liquidity flowing, massive amounts of money transferring hands in real time. Very, very bullish for all that right there. But on with the technical analysis. If we zoom into the 1 day or the daily time frame, you can see now we've had that cross. And we've been talking about this extensively ever since right about there. We told you the 50 in red was going to plateau and crash to the downside over the coming days to weeks and eventually cross the midterm or the 100-day moving average in blue, which it successfully did on the 12th of September. And then we told you that the green or the 200-day long-term exponential moving average, and this is basic technical analysis, was going to start to run parallel to the price, and the short term or the 50 after the cross of the 100 in blue was going to cross over the 200, right, in green, and then eventually the blue would start to catch up with a parallel running 200-day, and it would eventually be green, blue, or it would eventually be red 50, blue 100, green 200-day moving average respectively, a complete flip from where it was green, blue, red. Now, fast forward into the future over here in October, it's going to be red, blue, green, bearish. That means every time this price comes up, it's going to act as overhead resistance on here. And we were telling you the great flip was going to happen. And the great flip has happened and continues to happen. And with that being said, if we zoom out to the longer time frame, we went over this on our last video with our exclusive technical analysis, that we had a bear flag that we thought could be a bear flag, and it was playing out, but then it broke to the upside and it invalidated what we thought was a bear flag, because the flagpole is only from here down to there or so. But look at the flag itself. It is twice as long easily as the pole, invalidates what that is. And then we see the new pattern. We had a rising channel with upper resistance right here on May 22nd, bunch of upper resistance on May 2020 or October 2022. Then we had the great pump, or we had another little hit right there in March of 23, and then the judge news that forcefully broke up and got over two major resistance points, this uptrending rising channel, and then this major overhead horizontal blue trading box, which was resistance, resistance, support, 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 flush, breakdown, right? And this gave the false signals where the criminal gangsters and the market manipulators that have infiltrated the United States government, the Federal Reserve, and the world banking system correlated and orchestrated and executed flawlessly and beautifully the news with the judge, with the technicals, to mislead the retail trader, throw missignals, misinformation at them, and keeping them on their toes and bought into the false hype where you had short covering, followed by the news, followed by retail traders that artificially pumped the price more than it should have, because when shorts cover, those shorts become buys, because you have to sell your shares of your short back into the open market at the current price, which turns buy orders from previous sell orders. The news comes out with the judge, and then the retail hops on the rest of the way, just to get rolled over as soon as you hit that peak right there. You had another nice rally run up with a rising price, falling volume, telegraphing it was going to come down, and old Vincenzo kept you 69.69 stops ahead of this big orderly decline that still has not had capitulation. And what I would be watching out for here now is if you can't get any of the buyers to come in as we're getting the big bearish flip right here, kind of like you had back here in a shorter time frame, barely in the daily time frame, but it was a much shorter area. You had the big flush, the big coming back up, and then you had a big dip to the downside right here, and you held for the last line of life at 31 cents and started the next uptrend, right? But I think you're going to probably get rejected in or around or near these moving averages, maybe as high as 57 cents for the big hook nose Jew bearish reversal pattern. But I think you're coming down to right here on the wick low soon, and then eventually you're going to trade down, fall to this 37 cents, and then end up back in this orange trading zone, a la last line of defense, get my shit together to the shit house, and then the VP volume indicator in red there from 29 to 31 cents. And then if you break that, you could come down into the capitulation where we made this prediction at the end of 2021, and we got down to about 28 cents in 2022, 76 to 77% down from the time we made the prediction, but came just short of the target, but a pretty damn good call. And it was just a case of delayed, not denied. And if you break and get down into this area, you have to be watching very carefully, as a slip could drop you to 18 or lower cents. And that is absolutely something that old Vincenzo has been talking about, been warning about. It is still on the table. We are not ignoring or shying away from those predictions. And we're going to see where the price eventually takes us. Then you can see here another thing with the Bitcoin price. We have the same type of thing going on. We got the VP volume indicator up here, which used to be support in 21, support in June 2021, support in July of 2021, support in January of 2022. One final grasp for dear life right around that area, but on the bottom side of it in mid to late 2022, and then the flush, then the breakdown, then the forceful move that clearly shows a break in pattern and a break in trajectory, and was duly noted. But you can see here, we had bear flag right there, flag, breakdown, a miniature bear flag, pull, flag, breakdown, pull right there on the breakdown, flag, breakdown, and then we had a mini dump here, but then we thought we might be in another bear flag, but once we got to here, once we really got to here, we knew that was invalidated, just like the XRP, what we just showed you. Go to my Michigan Snow Forecast Gold Standard uh, on Facebook. The best climate and weather information you can get on Facebook. As you can see, we have a happy customer there, but we knew that it invalidated this, and this became a rising channel, just like XRP, with upper resistance, lower support, hitting once, twice, straddled along it and got rejected with a big dump on the VP volume indicator. And that's your major area now, as you're having a flip here too, just like the XRP. The 50, if we zoom in here in the daily time frame, the 50 in red has crossed the 200 and is now right on top of the 100-day moving average. You can see it right there where the 50 in short started to level off a little bit because we had this pump, but what you'd expect is some trading and then a further pump to the downside and have the complete flip here. And we're going to be paying attention to that because on the upside, you could come up to 29,394 and 3 cents to get another rejection off of there. If you want to get bullish and break this pattern, you get up into this red trading zone and start holding it as support and kick to the upside, or you're going to have a big fall to the downside to about $19,177. Like, subscribe, and share. Peace and love.